Hello and welcome to Rock Your Financials. I'm really pleased to be here with you today, and I'm delighted that there's so many of you on the call. I'm very pleased that you want to learn more about how to rock the financials in your business, that you want to discover why it's so important to manage the financials in your business. Hi, I'm Gillian and I'm on a mission to encourage and help business owners to get a grip on the financial aspects of being in business, because good financial management gives you a much higher chance of business success. It makes it much easier to grow a business, and you get to sleep well at night. Poor financial management is one of the ways to ensure your business is not as successful as it could be, or even fails completely. You might be making less money than you could if you actually kept expenses lower. Or it may be that you're making sales and you're thinking that that is money at the bank, and when in actual fact it's not until you've been paid by your client. And then if you're not monitoring cash flow, you could end up with not enough money to pay your suppliers. And even some of the really big high street companies go out of business because of poor cash flow management. So I don't want that to happen to you. And so that's why I'm a big advocate of financial management in business. You don't need to be an accountant or a bookkeeper to manage your business financials. Yes, it's a bit dull sometimes keeping records, and if you have a lot of sales, if you're running a shop or something, then yes, you almost certainly do need to use a bookkeeper. If you have a limited company, you may choose to use a bookkeeper to do quarterly accounts, to do your sales tax, or in the UK, VAT filings. You may choose to use a bookkeeper to do your year-end financial accounts. But during the course of the year, you can be keeping records for yourself and monitoring those records and looking to see what it tells you or what they tell you about your business, and then you can think through what action you need to take, either because things are looking a little bit rocky and you need to do something about it, or because things are actually quite genuinely looking very good and it's an opportunity now to invest in your business or even grow it to the next level. So you need to keep accurate, regularly updated records. You need to take care of your income. Make sure you invoice correctly, promptly, that you push for payment if somebody's late paying you, and that you allocate that money to the appropriate accounts. You need to keep expenses as low as possible. You need to manage your cash flow. And when you see problems brewing, you need to take action. Ignoring things and putting your head in the sand actually only makes things worse. It's far better to face things out and deal with them. These are the really important things that a business owner needs to keep on top of. But as I say, you don't need to be a bookkeeper or an accountant to accomplish this. You might use a bookkeeper, but you don't need to be one yourself. So for those of you who don't know who Gillian is, I had a successful international corporate career, and then for personal reasons I started to work on a freelance and consultancy basis, and I help entrepreneurs around the world develop and evaluate their business ideas, understand their marketplace, competitors and target clients, and I help them to develop marketing strategies so that they can become known, liked and trusted. But in all of this, I'm a really strong advocate of having financial control in business. If you want a successful, sustainable business, one which you can grow when you're ready to do so, you need to have a solid financial foundation. And I'm not just talking about debits and credits, I'm talking about financial management. It really is very important. So why get a grip on the financial side of being in business? Why am I going on about this? So if you've got a financial grip on your business, there's no more lying awake at night worrying about paying the bills. You've got a business that can afford to pay you a regular salary. You know whether your business really is profitable or not. And if it doesn't look as if it is, or there's some parts of it that are not, then you can take some informed decisions as to what to do. You'll know your current cash flow status, so you'll know if you're going to be running into some cash problems and can make the necessary arrangements. And there's no more dreading those year-end tax filings. You know the numbers, and you've also put the money on one side to be able to pay your taxes, so you have sufficient funds to pay them. And you can make sure that you get paid what you know you're worth, because in running the numbers, you'll see whether it's likely that you need to put your prices up, and you'll be more confident in doing so. So you really do need to have financial control in your business. Your business will benefit, but you too will benefit. So here are some questions for you. Do you have all your financial records organized and up to date? Do you know how profitable your business really is? Do you know how much your business costs to run? And do you keep those costs under control? Do you know what your current cash flow situation is? Do you know how much interest your credit card companies are charging you? Do you have money put on one side as a cushion in case you get sick and can't work or a client doesn't pay for some time? And do you put money aside as soon as you earn it to cover the tax payments that would be due later on? Now, if you answered no to just one of these questions, then I'm really sorry, but you don't have good financial control over your business. You really should know the answers. You should know whether your business is profitable. You should be able to say, yes, I made X amount of profit last month, last quarter, last year. You should know if you've got several income streams, which ones are bringing most of the money into the business, which are the most profitable ones. You should know your current cash flow situation. And you should be saying, yes, Gillian, I do put money on one side for sales tax and for year-end taxes, etc. But you see, you have financial control when all your invoices and receipts are numbered, recorded, and filed. And there's no receipts left lurking in drawers or in a pile on your desk waiting to be recorded, because they can easily get lost. And then what happens, you've lost the receipts and you've also got no record of them. So it means that you're actually at the year end making more profit than you really have, and therefore you're paying more tax than you should be paying. And you don't want supplier invoices waiting to be paid. I'm not suggesting that you pay them the second they come in, unless there's cracking good payment terms that if you pay within 7 days or 14 days, you get a discount. But at the same time, if you put them on one side, it is easy to overlook paying them, and then you're going to get chased by those suppliers. It can adversely affect your credit ratings if they decide to use invoice factoring or something. And it also means that you are not going to get a good reputation with that supplier. And if you're running a shop or you're a crafter, you want a good reputation with your suppliers. You want to be the person that pays within a reasonable time frame, because then you're the person they're more likely to give good payment terms to. You need to know what your business expenses are and be able to justify them. You need to know what's business critical and what isn't, and what expenses you could possibly pay less for even. You need to know which clients owe you money, how much and since when, and you need to chase them for payment. And I know some people find that very hard to do, but you know, if you've made something, then you deserve to be paid for it. If you've performed a service, you deserve to be paid for it. And you need to know how much money you have at the bank. And you also need to know how profitable your business is. And you need to have money set aside for tax. And if you do all of these things, then you'll get financial control in your business. So let's take a look at some of the key things that you need to be doing. You need to be keeping up-to-date records, but you need to look at these to see what they're telling you, and you need to take action where needed. You need to monitor the profitability of your various business offerings. You need to monitor your cash flow. You need to manage your income and allocate that income to specific accounts, particularly for your taxes. You need to keep a control on your costs. You really shouldn't be mixing business and personal finances. And you really need to make a date with yourself and do this on a regular basis. It's not something that you do because you've listened to this webinar and you think you'll rush out and do it and you feel good for a while, but you don't do it again for a few months, or something that you do at year end. When you come around to tax filing time, you need to do it on a regular, frequent basis. It's essential to keep records, and it's essential to keep them up to date. So why bother with keeping records? Well, they enable you to produce the reports you need to monitor what's happening in your business. And good financial records contribute to your business success. They help you make informed decisions about your business. And they can make life a heck of a lot easier when it comes to tax filing time. So some of the key records to maintain are sales reports, where you're logging your invoices and noting who's paid you, or you're making a record of the sales that you've made that week if you've got a lot of inventory that's moving rapidly. You need to know who owes you money so that you can follow up with them. You need to know about the money that you owe to people, what outstanding invoices are there that you need to pay. You need to keep track of the expenses so that you can actually deduct these from your income when it comes to tax filing time. And obviously payroll is not just a practical thing to do, it's in many jurisdictions a legal requirement that you maintain correct records of payroll costs. And you need to keep a record of your inventory as well. So let's look at some of these in more detail. So keep a record of all the sales that you've made, particularly if you're in the services business, where perhaps you don't have so many clients, even if you have 5 or 6 each day. It's still important to keep a record of those sales. Have a unique number for each invoice. And I always use a unique series of numbers for each client. So if I do some work for Mary Smith, the first invoice would be MS0120, the next one MS0220. If I've got somebody else called Joe Bloggs, then it would be JB0120, JB0220. And the reason why I do that is so that clients have no idea how many clients you actually do have. And when you're new in business, I think it's really good that clients don't think, oh, this is invoice number 3. It's already halfway through the year. They obviously don't have a lot of clients. I think it's important that you give your clients confidence. And record the details, whether it's in a ledger book using pen and paper or an Excel spreadsheet. Record the details of your sales, because that's then going to help you when you need to know who has and who hasn't paid you, so you can follow up with those bad debtors. So you need to keep all your receipts. I keep the paper ones in one file, and I number them and I put them into a spreadsheet, so that if I was subject to a tax audit and they wanted to look at the invoice that I received from a hotel, and I know that's, I don't know, invoice number 20, then I can very rapidly find it. I'm not having to look through everything to find it. And also, if you have a register of the receipts, but during a tax audit you can't find the receipts, then they get disallowed, which will then increase your profits, which will increase the amount of tax you would need to pay. And that brings me to my next point. All heat printed receipts, photocopy them. When I was in Canada and I was subject to a tax audit by Revenue Quebec, they went back to the first 2 years of my business, and that was several years back in the past. I had all of my receipts, but all of the receipts for things like laptop, printer, the more expensive items, unfortunately they'd all faded, and so they were disallowed, which meant that my expenses were less, my profit was higher, I had to pay more in tax, and I was a bit upset about it, but I kind of understood the situation and was happy to pay it. But they charged me interest for the situation as they saw it of non-payment of correct taxes. So do be careful and go to the trouble of photocopying your heat printed receipts. And what I do with the electronic ones is I download those invoices and I put them in an electronic file, so that if I was audited, then I've got all the ones for GoDaddy, I've got everything that, stuff I bought on Amazon, programs I've signed up for, and it just makes life a lot easier. You may never be subject to a tax audit, and if you are and it's in the UK, it might not be anywhere near as painful as it is if it's Revenue Quebec. The lady was very nice, but it was nonetheless very stressful. So we need to talk about debtors. I suggest that whenever you send out an invoice, you record the number, the date, the name of the client and the amount, so that when the client pays you, you can then record next to the entry the date that they paid the invoice. And then at the end of the month, you can see all the people who've owed you money for, say, more than a couple of weeks, and then you can follow up with them. So you need to produce reports, and these will tell you how your business is performing. It will tell you what money is owed to you, who by, how much and since when, so that you can take action to recover that money. And it will also show you what money you owe. It will show you your cash flow situation, whether you need to take action. So it's really important to produce and review the reports, not just produce them, but review them and then take action on them. Don't just file them away because you've got a nice report. And this is especially the case if you get your bookkeeper to do reports. They can probably produce these very quickly, very easily for you, but don't just put them on one side and think I'll look at them later or glance at them. Actually do look at them properly, and that's what I'm trying to get you to understand here, that you don't need to be the bookkeeper or accountant. You don't need to understand debits and credits, which is what a lot of people think. We're talking financial management here. Can you see that your expenses are increasing over time? Why is this? Can you see that your debtors, the people that owe you money, is increasing over time? What's going on here? So look at the significance of them, and if there is something that isn't happening that should be happening, take action. So what's the current position of your business? This is something we need to look at. We need to start at the beginning. We need to know whether the business is making a profit or whether it's making a loss. And you need to also consider whether the different income streams are making a loss or a profit. And if you're not making a profit, then you need to review what your products and services are doing. Are they selling? And if they're not selling, then you need to consider why this is. You need to investigate and find out. You need to look at your price points. It might be that your price points are high, that's why your products aren't selling very well, but it may be that you're actually pricing yourself quite low. And particularly in the services sector, that can actually be an ill-advised thing to do. People have certain expectations as to how much money they're going to have to spend on a person that's offering chiropractic treatment or massage or beauty treatments, or if they're hiring a consultant. And if you're very low on price, that can often make people feel very nervous and not want to do business with you. So maybe you should be looking at your prices with a view to increasing them. You need to look at your cost base. Do you actually need all those costs? Could you reduce some of them? Could you eliminate some of them? What's your level of debt? And what interest are you paying on those loans? You need to keep interest on loans as low as possible. And sometimes it can be very attractive to actually use credit cards to finance a business rather than bank loans or biting into a line of credit. In the UK at the moment, there's one credit card company that's offering 0% interest on transactions for 24 months. That's very attractive. Or you might use a credit card with a higher interest rate, but do a balance transfer to another one that's offering balance transfers at 2.9%, 3.9%. So do you have debts? Do you have outstanding balances on your credit cards? Do you have a loan from the bank or from a family member? If you do, you need to manage those debts carefully. You need to be sure to make the monthly repayments on the bank loan, otherwise the bank might decide to pull the loan in. I would suggest you don't borrow too much from a family member, because if they had financial difficulties, they might well ask for that money to come back. And obviously balances on credit cards, particularly if you have a preferential interest rate, if you don't make the payment by the due date, then you'll go back to the higher interest rate. And really, unless you've actually had to equip your business, so you've started a shop or a cafe or something, or you're carrying significant amounts of inventory, you shouldn't really have very much debt. And certainly for a services business, you should have almost no debts. So this brings us to the subject of cash flow, and you really do need to monitor your cash flow very carefully and very frequently, because it's cash flow problems that will sink businesses, even the really big ones. And so I'm going to talk to you about what this is and how to go about it. So the key point here is that profit does not pay your bills. Profit is the difference between sales and expenses. It's an accounting term to talk about sales, because you may make those sales but the person doesn't pay you, or maybe they change the scope of the mandate and it ends up with less money coming in for you. It's cash that pays the bills, the money that you have in the bank. so that you can write a check out, you can make an electronic transfer of funds from the bank. If the money is not there in the bank, you can't pay your bills, you can't pay over your sales tax, you can't pay your taxes at the end of the year to the government. You need cash. If cash flowing into your business exceeds cash flowing out, you can continue to operate. If the cash flowing out of your business exceeds cash flowing in, then your business will run out of cash and grind to a halt. And you don't need a cash deficit for very long before it can put you out of business. And you hear of retailers and large companies going out of business, and everybody says, oh my goodness, they've been around for so many years, maybe sometimes 50 years, 100 years even, and they're out of business. Bad management, bad cash flow management. You don't want to be one of them. So let me talk you through how to do a cash flow forecast. You're going to start with cash at the beginning of the month, and I suggest you do this in an Excel spreadsheet rather than on a piece of paper, to be honest. Then you add the receipts that you anticipate receiving during each month of the cash flow forecast. And this is a forecast, this is a prediction. And I would suggest you look out over 6 months, no shorter but no longer. And you need to be prudent. Just because you would like to make a certain level of sales, just because you would like clients to pay within a certain time frame, be prudent. Don't assume that you will get all of those sales, and don't assume that the clients will all pay you promptly. Then you need to subtract payments that have been made during the month. So for each month, think about what payments you'll have to make. There may be some fixed costs such as rent, electricity, but also think about what might happen at that time of year. Maybe there's some seasonality in your business. So think about the payments you may have to make. And again, this isn't you receiving the invoice, this is you paying the money out from your bank account. And that will leave you with the cash at the end of the month. So just to reiterate, we're not talking about the invoices you've sent out, we're talking about the cash that you anticipate receiving in from sales of your products or services. And the payments are the payments you anticipate actually paying, money coming out of bank accounts. So it's money in and money out. And that will give you the cash at the end of the month, which you would carry forward to the following month. And then you'd go through the same process again for that month. And as I say, I would do it over 6 months. I wouldn't do less. I wouldn't go any further out in time than that, because it becomes increasingly difficult to predict. And monitor this regularly, at least every week. And if you're in a cash-strapped situation, you might actually need to do it daily. I do work for large institutions sometimes when I'm teaching, and they are a pain when it comes to getting payment out of them. And they can take weeks and weeks and weeks even to reimburse a quite hefty expense claim. But during all of that time, you're having to carry that cost, you've had to pay that credit card, that's cash going out. So you do need to be careful and monitor your cash very, very closely. So if your cash flow indicates you're going to have a problem paying your bills, you do need to take immediate steps to do something about this. You may need to ask for an increase in your line of credit. You may need to ask for a bank loan. You may have to consider increasing prices for some of your clients. Often entrepreneurs are reluctant to increase prices for the clients that they've had since the beginning, but your expenses are going up. I'm not talking about your cost base, but individual expenses can go up because of inflation, because of increased prices out in the big wide world. So you do need to pass some of that increase on to your clients. You may need to reduce some of your expenses, or it may be that you are going to buy a new laptop or a new printer or something, and you have to postpone doing that. And this is a moment where if you've got debtors, you're chasing them for payment. And you can legitimately say to them, I've done the work, or I've made the item for you, or you've had the item. It is time to pay me. I am not the social fund. I am not your line of credit. You're putting me in a position where I will have to go and borrow money to cover my expenses. It's unacceptable. Pay me. And I think then if you lack confidence in hustling for payment, when you see that you're going to have cash flow problems, it might just give you that kick up the backside to actually be more tough with clients and get out there and hustle them for payment. You can be polite, you can do it elegantly, but you can make your point and stay firm on it. So now we need to look at how you're going to control the costs that you incur in your business. And many companies have a cost base that's way too high. And if you review your expenses, you'll probably be surprised that you discover that not everything is essential, not everything is business critical. And a lot of the expenses could perhaps actually be at a lower cost, that you could have the same services, but for a lower cost. So now it's time to check your expenses. If you have a list already of your expenses, that's great. If you don't, then when you get a chance after listening to this webinar, make a list of all of the expenses you've incurred in your business over the last 6 months, and then review each expense in turn and ask yourself whether it's really essential to your business. And if it isn't, do you need it? Should you actually say, well, this isn't business critical, I'll eliminate it? Or do you need to keep it for whatever the reason, but find a way to actually reduce the expense? Maybe, you'd like to use Infusionsoft, but, if you can't afford it, then MailChimp it's not as good, but, it's adequate. Or it may well be that you would like to have a shopping cart, but if it's $60 a month, then your business can't sustain that at the moment. So maybe you do have to settle for using PayPal. And on the following slides, I'm going to give you some hints on how you can reduce costs. And I'm going to be looking at people, rent, domain names and web hosting, and marketing. Obviously, there's lots of other categories of expenses, but I'm just going to go through a few to give you an idea of how you can possibly start reducing your costs. So if we look now at staff expenses, do you actually need staff? Do you need people? If you've got a shop or a cafe, then yes, quite possibly you do need staff. But if it's an online business, maybe you could manage with a virtual assistant on an ad hoc basis, or maybe you could share them with somebody else. And there's also the possibility, if you have a nearby university, that on the MBA programs, there's students looking for projects, and this can often be the case for marketing. And maybe you could offer a mandate to a student for their work project. Sometimes you have to pay, but it's a very small amount, relatively speaking, to the expertise that you'll be benefiting from. Sometimes you don't have to pay for it at all. So it's worth looking into ways in which you can get the assistance that you need at a low or no cost. Now here's where a lot of new entrepreneurs go wrong. They're set up in business, so now they have to have an office space. Really? And do you have to have it in such a fancy building? And did you really need to be downtown? I mean, downtown, yes, if your clients are going to be coming to you and using public transport, but if they're going to be driving to you, maybe you could be out of town. Perhaps you could even work from home. Maybe you could borrow a friend's home office if they're out all day and the place is quiet. Perhaps you could share an office, maybe not physically both people being there at the same time, but you're there one week, the other person's there the next week, depending on your schedules. Or maybe you could offer, maybe you could rent space in an office spaces facility near you. I wish I hadn't written that phrase now because it's a little bit of a mouthful. And domain names, do you really need so many? I do have a lot, I'll admit to this, but I have several websites on different topics, and because I produce information products, I often have a unique domain name. So for example, for my Rock the Financials program, I've got a domain name, rockthefinancials.com. For the challenge, I've got thefinancediva.com, and those point to the relevant pages on my other websites. And it's just easier when you're talking to somebody and saying, well, go over and read about it on my website. You're not having to say www.thebusinesslaunchpad.com/programs/rock-the-finance. You get the idea. But do you actually find yourself with domain names of programs that you no longer sell? In which case, what I do actually with GoDaddy, and I get all my domains from GoDaddy, put them on manual renewal. Don't have them on automatic renewal, because then you have to actually think about it. Do I want to renew this? I mean, the crucial domains I do have on automatic renewal. I don't want to lose those. But the ones for my information products and stuff, I'll have them on manual renewal. And how many hosting plans do you have? I have one. I can host multiple websites, but I do know people who are not that savvy, who actually have a hosting facility for every website. and that is expensive and you do not need it, but I'm sure you don't do that. Now marketing, here's a bit of a thorny one, because you probably said, well, I do it myself. It doesn't cost me anything. I use social media, it doesn't cost me anything. It costs you time. Time that you could be promoting your products and services, time you could be meeting with clients, time you could be doing what it is that you do. So I suggest you multiply the hours you spend, keep a record of the hours you spend doing marketing, multiply it by your average hourly rate or your hourly rate, and I think you'll find it's quite shocking actually how much money that you spend on marketing your business just by the effort you put in on social media and other activities. And make sure things like flyers and that are evergreen. Don't put specific dates and venues on them, so that then you can keep using them rather than having to chuck them out and print new ones. So marketing is important, but there are bootstrappy kind of ways of doing it. And if you want to know what they are, send me an email. I'll gladly tell you. So it's time now to look at all aspects of income. We'll look at invoicing, and we'll look at following up on getting payment, and we'll look at how to allocate the money when it comes in. So let me ask you some questions. Are you invoicing promptly? I invoice as soon as I finish work for a client. The only time I make an exception is if I'm coaching a client, and then I'll invoice at the end of the month. And I maintain that invoice as I go. So as soon as I've had a coaching session with a client, I will make a note of the date and the length of the coaching session. And I do this partly to save time at the end of the month, but also because sometimes a client is, say, 30-minute sessions, but for some exceptional reason it runs to 45 or 60 minutes. But if you work from your diary at the end of the month and you haven't noted that, then you probably won't be invoicing for it. But at the end of the day, it's still your time for which you should be paid. And are you following up when somebody hasn't paid? I know that can be stressful for some people. They're not comfortable doing it. But if that is the case, just write them an email. A polite email. I sent my invoice number blah blah to you. It's now been 2 weeks, and I'm writing to ask if you could please be kind enough to make payment by the end of the week, or if it's towards the month end, by the end of the month. And then if they don't respond, if they still don't pay, then obviously you do need to follow up again. And if you're not comfortable phoning them, perhaps get a friend to phone them for you. And what about your prices? Are you setting your price points at the right level? If you're a crafter, maybe you're having to source your raw materials at a higher cost than other people are, and that's reflected in your pricing. And that can sometimes be problematic if you're in an area where there are a lot of crafters. And at the other end of the scale, if you're a consultant, a chiropractor, somebody in the services industry, it might be that you're not actually charging as much as everybody else. You might even be charging substantially less, and that can actually detract from your credibility and put clients off. And are you leaving money on the table? If you're invited to a speaking gig, have you, if you've written a book, taken copies of it and put it at the back of the room? Is there flyers there that talk about other ways in which the people in the room can continue to work with you or benefit from your services? So if your clients owe you money, you're going to be chasing them for full payment, and don't be shy about it. But if you're really not comfortable doing this, have a fictitious person who works for you send out the emails, or have a friend phone up and chase for payment. If you feel you need to get them to agree to a payment plan, don't push it out too far in time, and certainly don't do any more work for them until they pay you. And okay, maybe financially things aren't so great, maybe you've got personal bills to pay, but you know what, go get a cleaning job. Do what you have to do, as long as it's legal, to get that money coming in, but don't do any more work for a client that owes you money, because it may well be that you're spending a lot of hours working for them and they don't pay you for that either. And it's just not worth the stress. It's just not the type of client you want or need. And you can, of course, consider factoring, where another company takes over the invoice and chases for payment, and you get a percentage of that. And hey, here's the fun bit. You've got money coming in. Isn't that great? Wow, lovely. It goes into the bank account. And you think, great, super, I can go out, I can get a new dress, I can take the girlfriend out, I can do this, I can do that. No, not yet. You're going to put some sales tax or value-added tax money in a bank account that you won't touch because it's not your money, it's the government's money. You have to pay that over to them every quarter, and you better have that money. And into another bank account, put the percentage that you might have to pay at year end. And here, look on the bright side. You may get some really well-paid work, and it may push you up into higher tax brackets. So put that percentage to one side. If you didn't need it, then that's money to go into your contingency fund. Pay yourself, give yourself a salary. It doesn't have to be a salary as in you've got a limited company and you're running payroll. It's money for you to cover your personal expenses. And that goes into your personal bank account. And put a percentage into another bank account for emergencies, ideally to keep your business going for 3 months. And why am I talking about different bank accounts? Because it's too easy, if it's only in one bank account, for it to all be mushed up together. And even if you say to me, yeah, but I've got a spreadsheet, and so I know that I earned $1,000, and I put so much money in for tax, and so much money for this, and so much money for that. But yeah, I bet if I came and did an audit on your bank account, I wouldn't find all that money there. And what's left should be sufficient to cover expenses. And if it isn't, then your cost base is too high, or your prices are too low, or you haven't got sufficient sales. Because, you know, you have to pay the sales tax over. It's not negotiable. You need to pay income tax or business tax. That's not negotiable either. You need to earn a living. Otherwise, what the hell are you doing this for? There's no point. So therefore, by definition, anything that's left over is the only money you've got to cover expenses. And ideally, you don't want to spend all of that on expenses either. So that brings me to business versus personal. Ideally, you should have a business bank account and a business credit card, but I know that isn't always possible. Often when you're new in business, it's almost impossible to get a business credit card. So here's what I suggest. Have a bank account where you put the income from your business, and then have the other accounts which I've just referred to, where you put the sales tax money, the income tax or business tax money, where you put the contingency fund for your business, and obviously money for you goes into your personal bank account. And keep one of your credit cards that you would use only for business expenses. So make it a date. Make a date with yourself. Update your financial records at least weekly. Check your cash flow weekly. Do a bank statement, a bank reconciliation statement on a monthly basis. Check your profit and loss from time to time. See how you're doing. Check who owes you money. Chase them for payment. And yeah, I know this stuff is starting to be a bit repetitive, isn't it? But hopefully, by the end of this webinar, you will have got the message of the key things you need to do, and you will also have recognized that I don't actually need to be a bookkeeper to do any of this stuff. And of course, take appropriate action. There's no point in having reports and not looking at things and know what it is, but then burying your head in the sand and doing nothing about it. And if you follow these simple steps, then you can have financial control of your business. And if we were to circle back to that slide at the very beginning of this talk, where I said, do you have financial control? And I asked those questions, you will be able to answer each one of those because you have financial control. And that means you've got financial zen. You can sleep at night. You don't have to keep stressing and fretting all. So like I said at the beginning, I'm on a mission to get business owners to understand that you don't have to be a bookkeeper or accountant to manage the financial side of your business. You need to keep records that show you information about your business. You need to understand what that's saying to you and take action on it. And if you do that, then you can have a successful business, a sustainable business, a business that you can grow if you want to. And it also means that you don't start getting stressed out as you get nearer to tax filing time. And to achieve this, I created a program called Rock the Financials. And it is what it is. It's not the lead in on the funnel so that later you buy my services or whatever. I have frankly no desire to be your bookkeeper or your accountant. I don't even want to be my own bookkeeper. I just want people to see that it's important to manage the financials, and it's not actually rocket science. And so that's why I developed Rock the Financials, and it's why I'm delivering it starting next Monday as a 5-day challenge. It's no cost. It's just there for you to take the benefit from if you so wish. If you want to get your business organized from a financial perspective and make sure that you know all of your numbers so that you can manage your business in an informed way, take sensible decisions, not stress out at tax time. Why not come over and join the private Facebook group where you can get going on the challenge starting next Monday? It's no cost and there's no upsell. I'm not going to try and sell you anything. Come over with an open mind, a willingness to learn the things that you don't know already, and a willingness to apply them to your business, and you really will reap the benefits. So it's www.facebook.com/groups/rockyourfinancials. And I really look forward to seeing you there. I'll be doing a Facebook Live for about 5 minutes every morning, and then there'll be information sheets and there'll be worksheets and there'll be things for you to do. And at the end of it, you will be on a good footing to move forward with your business from the financial perspective and keep the momentum during the rest of the year and not stress out at tax time. Now, does that sound good or doesn't it?